All right, so I'm gonna start recording now. So welcome everybody to the markup backtesting call that I think a lot of you were kind of like waiting for. Today we're gonna be practicing the skill of just literally practicing and like marking up the week's price action. I mean, it's good that it's a Friday that we get the whole week. So in the future we might do this again on Fridays. I'll kind of switch back and forth between doing this and software FX, so we get like a mix of stuff.
Hello?
But hello.
Alan, can you hear me?
Yeah, I can hear you, Shane. What's up?
Oh, sorry, mate. I've got a new headset. I don't know how to work thing.
It's all good, man.
I'm just checking.
We can hear you. But yeah, anyways, so what I wanted to show you guys is kind of the format that I'm using or that I've been using. I actually stole this from Aaron, so credit to him because he built this like Notion type template. So I'll quickly show you guys. And then we'll run through like an entire template. I'll show you guys how to like duplicate this, and you can duplicate the entire thing as well just by going. I think there's like usually a button on the top right if you have the link to this. If you look at announcements, I dropped the link in there too. So I'll quickly show you guys just an example of one that's completed, right? And you can modify this, you know, kind of to whatever you like essentially. It's just a matter of like, you know, what your taste is in a sense. If you want to like, you know, modify like the text and stuff, you can do that. I just have it kind of set to this. But usually what I do is I'll mark out daily, 4 hour, and I'll start like typing notes about it. We won't necessarily go this in depth about it because we do have like a whole week to cover. I don't want to sit here and type in front of you guys. Like, it's probably just going to take too long, right? But we'll go over like daily structure, 4 hour structure, that kind of thing. 15-minute, 5-minute, right? I just sort of like break it up like this. And this is kind of like, we'll cut price to before like London and kind of do our assessment of like what we see. And then we'll go through the entire like London and New York session one by one. And we'll mark out like, we'll have like an overview and then our different like models, or not models, but our different entries that we see for the day. So I'm going to mark out like the 15-minute zones that we pop into, or 4 hour zones, whatever POI. And then the important thing that we're kind of going to like focus on for this is not necessarily marking out every trade, but marking out ones that like fit our model. So I have a bit more of a strict model that I'm going to look for this. You guys can kind of see some diagrams of it, like how I was kind of looking for it.
Sorry, Rob.
Hey, what's up?
Can you watch the general chat? Because my email bugged on the screen and it's annoying.
So we have to leave that on just because of the leakers. Somebody keeps leaking the Zoom calls, but don't worry. You'll be able to rewatch it. I know it's kind of annoying to have the watermark over it. You'll be able to rewatch this on the course without like that annoying watermark of yours. So
Okay. Thank you.
It's just to stop people from like trying to record the Zoom. You know what I mean?
Thanks.
Because we have leakers. But anyways, so again, I'm gonna look for a very specific model in the price action that we're like playing through. Like this is kind of one of them. Basically, it's the flip zone stuff, but I'm just looking for liquidity on top of it. That's the most simple way that I can explain it. That's gonna keep, you know, like keep us out of like certain lower probability trades. Not to say like taking flips on their own isn't bad either, but basically I want to look within each POI whether the model shows itself, and if it's an L as well, I'm going to leave it in there, because again, if I'm just looking for a very specific model and like you guys are looking for consistency in executing a particular model, it doesn't have to be my model. It could be just SD flips, you know, when you're actually doing it on your own. But you can look for it. If you take an L on it, like put it in, why not, right? And you can kind of get an idea of like what your net R should be for the day if you executed on all of the POIs that it hit. Does that make sense? So yeah, other than that, there's also this calculator. You just put like, you know, the total R for the end of the I guess the markup. So we'll calculate it at the end of each day or each session, because we'll do it for London and New York. And then that'll do like a net gain based on like 0.5% risk, and then your net profit split for like 100K FTMO account. Now I have this set for CAD, but you guys can always change this. You just put the conversion rate here. So if you want to do US dollars, do this. If you want to do GBP, do whatever the exchange rate is. You can literally find it on your trading view. We trade Forex after all. So I'll just leave that like that. And yeah, let's, I guess, get started here. So if you guys are on here and you want to follow along, you can. But again, you can just watch this and kind of get an idea of how to use it. Basically what I do is I just right click, duplicate the template, and then I'm going to pull it over. I'm just going to put it down here because I already have mine here. But basically I'm going to rename it, EU September week 2, right? Because it's the second week of September. And we'll start with Monday. So Monday is actually a bank holiday, or was a bank holiday. It was Labor Day for both the US and Canada. And I want to mark it up anyways, just to show you guys that, number one, there were setups in it, even with my model, which is, I feel like, really conservative. And then number two, it's good to show you guys like potentially like some L's that we would have taken in it. Like price action, I think what happened was there were a couple setups for mine in there on Monday, and I'll show you guys in a second. But they pretty much just hit BE, and I think there was, I don't know if there was an L, but there might have been. Again, I just want to show you guys that like you can mark stuff up and take L's in it, and then you'll see like later on in the week, as long as you stick to the plan like 100%, right? This assumes like you have perfect execution, of course, and you don't hesitate and all of that stuff, right? But assuming that you stick to it, potentially you're pulling like a lot of R out of the week, just sticking to one setup, right? So let's get started with that. We'll start with Monday recap. So let's start with daily and 4 hour. And the nice thing, again, obviously about this is we can start with like just daily and 4 hour. We could even do it in like sections if you guys really want, but the way that I like to do it, just so I have like a good understanding of it, is I'll do like one day at a time, right? So we'll start with daily, 4 hour, and we'll even look at weekly too. You can add that in here, right? So I'll do 1 week, just so we get an idea of if we're in a POI. We don't necessarily need to look at like expectation order flow or structure for that, but let me make sure I have the right one. Let me unpin this. Okay, so let's start with weekly. And if you guys want to help me mark this up, you're welcome to like, I'll try to make it a little bit interactive so we can learn something from it. If you guys want to mark up like certain supply demand zones, whatever, want to help me map out structure, you're welcome to do it, and you can practice that way. Because I know a lot of people struggle with it still, so you're welcome to ask, and we can kind of practice that way. So starting with weekly, you can see that we've tapped into a weekly quite a while ago. This is like December, right? Again, I'm just gonna mark it out because it's there. You can see we're starting to create like bearish order flow, almost like a chain of supply kind of sitting here, right? I don't even know if I have a weekly. Oh yeah, I do. Okay, I have a weekly zone here, so we'll mark these out. Again, just to get an idea of like where we are. We're not necessarily looking at structure here, because if you're gonna look at weekly structure, you're literally talking about waiting months at a time. Like this is not gonna get hit for a while, right? And it might not even get hit like this year for all we know, right? So that's weekly. And then we'll do daily, which is a lot more relevant. You could look at structure for this if you're a swing trader. There's nothing wrong with that. For daily, again, I'm just gonna mark out any relevant zone. So I'll start with this wick, because this wick obviously swept liquidity, right? We're getting a reaction off of it. So here's the liquidity that got swept here. It's the same as what I marked up in that video that I posted like the other day of like the pre-session markup thing, right? We had like inducement here. This was even really used as inducement. And we're starting to see a reaction to the upside, right? Taking out supply zones. And then we also have this daily zone. Let me just make sure I mark them as daily. There's daily here. Do another one. Actually, I'm really quick. I'm just gonna pop this open here. Where is it? Okay. Just make sure I'm recording and everything here. So if you have any questions while I go through this, because I'm gonna go kind of slow here just to start, and then I'll pick up the pace so that we can try and like cover as much of the week as possible. And you can type in chat too, obviously. I have that open. So we have a flip zone here, right? So we can see this supply zone failed, right? It's a daily supply zone, so I'll call it daily. That's kind of relevant, right? Again, we can hide this later on the 4 hour, right? But just for our daily picture, I want to like have a nice kind of encapsulating picture of everything that's going on, right? We have this daily, right, which is starting to react. It's basically this inside bar. And also obviously left like equal highs. And then we have this daily sitting above, which also swept liquidity. So I didn't quite cut price back. So what I'll do is, let's actually see, when was the start of this week? We'll do the 6th, right? So I'll pull it back to, where is it? September 6th. Right here. So this is what it would have looked like on Monday, right? I want to take a picture of this obviously because we don't know what happens yet. You can kind of get an idea of it. Okay, so we got a daily sitting above. We have equals here, right? You guys can see that there's like a ton of liquidity sitting there. I think this actually swept it by like a tick, but to me, I'm still seeing this as like equal highs, right? This is pretty much just like, in a way, external range liquidity of this leg, right? On the daily anyways. Okay, this flip zone, it's pretty nice. Again, I don't remember if we tapped into this or not. I have really poor memory when it comes to like remembering price action, which is good for me when I backtest, but maybe you guys have better memory than me. I don't think we tap it though. I think we just kind of, even though I just saw it, it's literally like this. Yeah, we didn't tap it yet. So I'll pull it back to this. Yeah, you can always rewatch it, guys. Don't worry, and hopefully it's not like too annoying. The whole point is like to learn like the skills here of like how to do your proper hindsight markups. And honestly, I think this is a skill that I realize like is almost better than doing backtesting in Software FX, because you actually get to sit down and like learn and like break down why price did what it did in like pretty much more recent price action, right? Within the market conditions that we're in. So it's obviously September now. We're starting to see like a pickup in volatility in comparison to the way like July and August moved, right? August was pretty corrective. July was super corrective, right? And you can see like we're obviously, even since like, you know, the 20th of August, we've been like pretty volatile, right? So yeah, those are my daily zones that I've marked up pretty much, right? Now all I'm gonna do is, and we can even mark up this one too, because we're starting to chain demand even, right? So I'll just mark out this. And I'm gonna try and make it like organized, right? Kind of like that. If you want, you can even mark out the liquidity that was built here. And we'll dive into this because these are like 4-hour zones as well, right? Kind of messy, but then all I'm gonna do is try to like frame this nicely and then just take a picture of it. So to take a picture, there's a couple ways you guys can do it. I'm trying to remember what the hotkey was. I think it's Control-Shift-S for TradingView, or what you can do is just use the snipping tool on Windows, which is Control-Shift-S. Oh wait, no, sorry. What was it? Is it Command-Shift-S? Yeah, Command-Shift-S. Or sorry, Windows key Shift-S, and then you can just kind of snip it like that. And now it'll be in your clipboard, and all you got to do is literally like paste it like that. Makes sense? And it'll upload. So it's whatever you guys prefer. I think there was a problem with like TradingView before, making like the drawings kind of blurry, and there was like an annoying workaround for it where you had to like paste it. But let's see, you have to paste it into your browser to get the actual link and everything, but I don't think that's an issue anymore. Let's see once it uploads what it looks like. Trying to think what else here. Yeah, so that's daily. This is what it looks like if you use like the TradingView thing. So it's actually not bad. You can kind of zoom into it, but I prefer just using the snipping tool because I'm so used to it. It's quick. Oh yeah, I was gonna say, so for Mac it should be, I think it's Command Alt Shift 4 to do like the snipping tool thing. Maybe Jordan, can you confirm for me if that's the correct? I haven't used my Mac in a while. I don't remember what it is. Oh, it's Command Shift 4. Sorry. Yeah. I think, yeah, Command Shift 4. But there's a way to do it where it doesn't just save it on your desktop too. I think it's Command Shift Alt 4. So whatever, you guys can like search for it. Oh, Command Control Shift 4. Yeah, otherwise it's going to save it to your desktop. So if you want to just save it to your clipboard, that's how you do it on Mac. It's the exact same as doing Command Shift S or Windows Shift S on PC. So I'll quickly do the weekly here too. Might as well. It's really easy. Like once you get like fast at it, you're gonna be able to just copy paste these in a matter of seconds. What's going to take you time is actually marking stuff out, obviously. So let's go on the 4 hour now, and we can actually look at our structure. So moving back to kind of what we were doing before on the last session, we're going to go on like the 16 hour this time. So again, you guys can use the 12 hour, daily, 8 hour, whatever. If you think about it, when we're marking out swing structure, obviously for 15 minute, what we were doing before is going on the 4 hour, right? So I believe that's a factor of, 8 times, right? If we do 15, right, times 8, it's 240, I'm pretty sure. Is that right? Just basically 4 hours, right? I think that is what it is anyways. Let's quickly like double check the math on that. Oh no, it's 30 minutes. So I think it's whatever the factor is, right? You can use 12 hours, 16 hours, whatever it is, right? To mark out your candlestick structure, and then basically pull, like fairly accurately too. You can pull swing structure out of it, right? On whatever the lower like relevant time frame is, right? So for 4 hour, what I'm going to do is 16, right? Or sorry, not 16 minutes, 16 hour. So let me just do that. If you just type it in and press H, obviously it's going to give you the 16 hour chart. And then we can mark out our 4 hour structure with that, right? So I'm going to start from the left. We always start from left to right, so we don't get caught in a complex pullback. And I'm going to use the marker tool to start marking it out, right? So we have a very clear idea of what structure is doing, okay? So same thing that we practiced last time. So we'll do this. So we'll start from here. I'm going to even use like this potentially as a pullback. We'll analyze it to see if this is correct, but I mean, I can even drop to the 12 hour to look at it. Yeah, so we'll use that as a pullback on the 4 hour. That's fine, right? That's our low. We're still within this overall leg, right? Actually, I'd be tempted to even like say that we don't want to consider this the entire leg, but whatever, it doesn't matter, because there's likely a pullback in here that's kind of relevant too. But anyways, if you look at it, right, within this leg we pull back to just above 50%, and then we break the low, right? So I'd consider this my next high, and then this our next low, right? Now the thing is, you could potentially use that as well, but I'm not. I'm going to just consolidate it all into one leg. Again, we want to look at swing structure here on the 4 hour, right? And then we pop up. Yeah, that's exactly right. We break that low, and then we eventually break that high, which defines this low here. Or you could say this low. Depends on how you want to look at it, right? For me, I'm going to do this low, and so I'll say that we're still floating our high up here, right? So I'll just leave this up here. And so now we've marked this out on the 16 hour. If I drop to the 4 hour, you'll see pretty much what I've marked out as swing structure. And I'll even mark it out with these like break of structure things. So again, like templates are going to be pretty important for you guys. Like what I use for this is just a dotted line, and I think I made it like number 3 thickness. So that's to like denote like my higher time frame boss, right? Or 4 hour boss, swing boss, right? So I'll just call it 4 hour break of structure. You can save it as a template, use it. You guys are pretty good with the trading, it seems like. Everybody knows how to use the tool. I mean, we spend probably like the majority of our time on this tool, so we're pretty much experts at it at this point, right? So that's our 4 hour swing structure. Again, I would even call this like part of it, or you know, I know some people like would have defined it like that, right? This entire thing is a leg. But again, either way, we broke structure here, it shifted, right? And then we kind of popped up like such. So that's our 4 hour. And before I dive into the 15 minute, we start marking that up and taking pictures of it. I want to take a picture of the 4 hour on its own, right? The reason I want to do that is because if I mark up the 15 minute, this is just going to be a mess. Like, it's going to be really hard to read. And if you ever want to refer back to your markup, and say you even take like a trade for that day, right? It's good to have all these markups, and you can throw this in your journal too. And that's something that I do. But if I ever want to refer to a specific date, I can always go back, you know, to this, or again, even like my journals, and see, okay, this is actually what was happening before session, get an idea of like what my bias was, you know, things like that. So let's maybe type out the bias for one of them. I know this is a bank holiday, but do you guys agree like we're bullish on 4-hour? Obviously we are, right? But we're tapping into a daily and 4-hour zone, right? So we can type that into like the recap essentially, and that's something, like I said, that I'll do, that I showed you guys before, because I want to be aware of like what's happening, and I want to try and like break down price in a very logical way. And again, if I ever want to refer to it in the future and see how I was looking at it on that particular day, like I can do it, right? I have it saved in a database now, right? Oh hey, what's up, Brian? So let's quickly do that. I'm just gonna type, okay, 4-hour bullish, but tapping into major daily zone, right? Slash 4-hour zone. Same with, I mean, daily, we can even say, like, I'd say honestly this is bearish overall and that we're just pulling back, but this could be because we're seeing supply start to fail even on the daily, right? If I go back on the daily, this tells us that like demand is actually in control here, and we could be kind of flipping bullish, right? We just don't know if like this is gonna produce a reaction yet. We do now know in hindsight that this obviously held, at least like for the week, but we don't know, like we didn't know on Monday whether this was gonna break through and come up into this daily zone or like, you know what, right? So far, I mean, it's pretty rangy. So like for daily, you don't even really need to type anything, but what I would have typed for this is just, yeah, daily is short-term bullish, but like long-term pretty bearish, right? And obviously, again, we've tapped into this larger daily zone, so it's not like super clear what's happening, right? Again, you could mark out expectation order flow for it, but I'm more interested in like the 4-hour and 15-minute, because again, like I'm an intraday trader, right? If you're a swing trader, mark this stuff out, right? All right, so now for 15-minute swing structure. If you guys remember what the trick is, we go back to the 4-hour. For this one, I'm gonna make it a little bit interactive. I want you guys to do it with me, just so that we practice it a little bit. So take out your pen tool. Try not to make it too messy, please. And let's mark out where you guys think 15-minute swing is based on the 4-hour here. So let's mark it out together. Sorry, let me move this out of the way. So I'm going to use my 15-minute, which is this blue. Okay, good. You guys are getting it. So I'm going to start from the bottom here, right? And we're just going to mark out where we see actual breaks of structure, and then we'll mark it out too, right? So again, I'm going to be very tight with it because we want to use candlestick structure almost in a sense on this, because that's going to define our 15-minute swing, right? Yeah, so I'd call this whole thing a leg too. Yeah, that's good. Yeah, you guys are getting it. I'm not going to count small like one candle pullbacks or anything like that because it's not really like relevant, whatever. Yeah, good job. You guys have the skill, I think, to mark this stuff out. It's very good. So let me clear everybody's drawings really quick. Clear. Okay, so we've marked it out. This one's a little shoddy because it's like, it looks like it actually sweeps a little. So we'll investigate this one and make sure we have it marked out properly. But what I'm going to quickly do is I'm going to take my next tool. And we could have even actually considered this swing too, but whatever. Call it one leg, right? I'm going to take out my line tool here, and I'm going to now use my mid time frame breaker structure. So we'll call it 15 boss. Right, so you guys can see it's just literally the same thing, but I use number 2 thickness, right? Dotted line, and that's denoting my breaks of structure, right? And I'm going to put it at the tip of each one, and then we'll kind of get to see like the actually, let's see if this one kind of broke. I don't know, I'm just thinking here. I'm gonna leave it on for now, but let's focus on like more recent price action for this a little bit. So we'll do this, right? We're still bullish, super bullish, right? Mark that one up, that's good. And then our last one here. So now if I go on the 15-minute, remember we're on the 4-hour and we've marked out candlestick structure to define 15-minute swing. If I now go to the 15-minute, you can see, it's beautiful. Look, it's perfect, right? So I'm actually going to delete this one because it really just swept it. So we'll kind of call it like that, right? So price did this. And then again, if you're like anal about it like me, like I like adjusting it so that things aren't off. That's the only problem with marking it out on the 4 hour is it'll snap to the 4 hour candles and make everything look kind of like disjointed. So I'll just kind of do it like this, move it around a little bit, right? And then same with this up here, right? Just so we have like a nice pretty picture for when we take a snapshot of it, right? Same thing. Again, I'm just using like the shift key to snap, and like you could even use control to snap exactly to the point of the high, of the swing high, and then the shift key to have it snap so it's fully horizontal. So that's our 15-minute swing structure. Does that make sense to everybody? Can I get like a yes in chat if it makes sense?
Yep.
And make sure we're not leaving anybody behind here. Okay, good, good, good.
Sure.
Or a check mark, that's good too. So honestly, for this, you guys can zoom in or out as much as you want. I'm gonna zoom in a little bit so like it's a little bit more relevant to like where we are in price. The other thing you can do is I'm gonna turn on my sessions. Actually, I'm not for this, maybe for these pictures, but just so you get an idea of like where each of these swing points are, right? Look, New York, London, like literally London open, end of day New York, Asia low, right? This one's New York, this one's Asia high. So it's just interesting to kind of see, right? Like where our actual swing points are developing. And we can look, here's the other reason I like, I guess, having these sessions on. Again, I'll turn it off for the picture because it gets kind of messy. And when people complain about my annoying like blue sessions in the background, and honestly it annoys me too. So I've actually tried like turning the opacity down. I don't know why this one has like such high opacity, but let me see if I can grab it from this. Where is it? Sessions. You see here. Oh shit, let me do that. Okay, so sorry about that. So let's pull price back to the 6th, right? Which was right here. It looks like our 4 hours even off too, so we'll move that. All right, I use gray for 4 hour swing, blue for 15-minute swing. Anyways, what I was saying was, the reason I like putting these sessions on is it's not really like necessary by any means, but I like to see like where my POIs are kind of coming from within like my more recent leg, right? Now it is a double-edged sword because I know like some people don't like marking out POIs in Asia, but as you'll see this week when we run through price, like POIs in Asia have actually like held quite a bit, right? Whether it was like midline or like even Asia high has been holding, right? So I don't want you guys to be like too strict with it, but how I'll mark out 15-minute POIs now, and we'll do this before we take a screenshot of it, right? We know that we're in bullish structure overall here, right? So we can either try to play the pullback or we can look to like take POIs here, right? Within this like bullish leg overall, right? Actually, hold on, let me quickly see something here. I realized we actually missed this pullback here. I actually did this when I marked it up originally too, on Monday or whatever it was. So this is actually another one we want to mark out. You guys see how this is also swing structure? It's weird because it's like, I think this was Friday NFP or CPI or something. It's really weird volatile price action, right? But regardless, like on the 4 hour, you see two candles, mark that as a as 15-minute swing. Like 100% you should be, because it is, right? So we'll do back to 15-minute, right? And again, I'm gonna mark out, like obviously we're bullish from here, but then we broke this, so we're now bearish, right? So we can consider any of these like POIs pretty much like bearish POIs that are technically with 15-minute swing, right? Because you now broke this low here, right? And we closed below it. So mark that out, that's good. Oops. Let me just move this a little bit. I like to have it like literally perfect. And this one too, we'll move it a little bit. Because remember, we marked it on the 4 hour, right? So it's gonna shift it a bit. So you can see we've obviously like basically got like a 15-minute change of character in a sense. And like a major swing boss too, right? Because we took the high, took the low. So change of character, right? Major change of character. So I'm gonna mark out all these 15-minute zones that I think like price could pull back into. We know that obviously like if I play through price, and I'll do this too when I do my hindsight tests and stuff, right? it doesn't even really like, I think it just barely like hits this zone and then eventually like blows through all of that, right? So we could play through the entire thing like that. If you're a little bit more of a beginner, like I suggest doing that. But you can also practice your mid time frame like structure and marking out POIs too, right? So what did we actually react to? It looks like we reacted to this 15-minute inside bar that was sitting below, right? You guys can see that. So that's one area I would definitely look for like an entry, right? And why is this a good POI? I mean, look, it swept liquidity here. If I were to go to like on the 5-minute, you'll probably be able to see a little bit more clearly, right? See? We swept liquidity here. It's kind of weird because we wicked and then kind of retested it, but nonetheless, like that's a good 15-minute zone. So we'll mark it out, right? Go back to recent price action. Again, you could have marked this out. And here's the thing, right? I'm trying to see if we can like, I almost want to purposely take an L here because I want to show you guys that you should be looking for your model and you should be happy to take an L on it as long as it like fits the plan, right? I don't think there was one, maybe it was Tuesday that I'm thinking of that had like break evens and maybe like a loss in it, right? Me and Brad Spicer went through the entire week kind of like just being very strict with this particular model because we wanted to test it like in preparation really for this call. It was like a pretty big part of it because I wanted to give you guys something like concrete to work with rather than just like running through software FX, random price action and like taking random trades, right? So with this, like again, we're really gonna go like and dive deep into each entry in a second, but yeah, I would have marked these out. Obviously I wouldn't have traded this because it's Asia. If you trade Asia then and it's in your plan, right, and you see the setup, you should be looking for a setup here, right? But I don't trade Asia, so we'll just delete that. We want to try and keep our like charts as clean as possible. You can see we start building like bullish, essentially like bullish order flow here, right? A demand chain. We build liquidity in between, right? So this is another area I would look for an entry, and I'll just mark it with, actually let me use a different tool for this. Oh, you know, we'll use the ellipse tool. It's just kind of ugly looking. You don't have to do this, obviously, but do that. Or actually what we could probably use is something nicer. I know there's like some nice tools in here. We can use an icon. I'll let you guys pick. Where is it? Okay, pick an icon, guys. Mark out which one you want me to use. It's basically, we need an icon for investigating lower time frame entries. So get your pen tool out and pick an icon with me. What do you guys want to use? Circle, the eye. What, Blackosh, what did you? Okay, it looks like we got a lot of people who want this little like electric symbol. We'll make it yellow too. It's kind of cool. Okay, cool. We gotta look for like nice entries there. So we'll look for one there. We can look for one here because this is within, I mean this is London lull, but like it's still like kind of within session. So we'll look for an entry there. This is obviously like a retest and then price pushes up. And we can even dig into like tighter price action here even, right? Because remember, like if we're just following like the very tight trend here too, like if we're like following a minor structure, this is obviously like bearish, right? What you could have done technically is tried to short this in preparation, like these wicks, right? In preparation for it tapping into these like lower zones, right? And again, you didn't know what was going to happen, so I can mark this out and we can look for the model here as well. So we'll do those three. I can't remember what I did. Let me like actually look at this and we'll get an idea of it. So if we go to my actual one here for, yeah, okay, so we did three. I'm not gonna actually look at them because I want to mark it out with you guys and give you kind of like an idea of it. And same with this, I think there were 3 entries on New York for Monday, despite the fact that it's like a bank holiday. I don't suggest like trading bank holidays, but again, like let's just mark it up for the sake of practice, right? There's a reason I marked it up too, right? So did that, that's good. Again, we can even look, this is like really like late in the day. This is already like 1 p.m. So again, I wouldn't be trading here, but we'll look for a setup anyways, even though I know we don't really get it. I think we like, again, barely ping into this zone. And then because we're so late in the day, it just kind of fades out, right? So now let's take a picture of this, and like I just usually press Alt R to like frame it for me. Sometimes it frames it really weirdly depending on like if you have certain indicators on, it'll like skew it like this, right? So just be wary of that. But usually I'll frame it as nice as I can, take a picture, and I'll throw it into the 15-minute here. So we'll throw it there, and then same with 5-minute. Now we can actually kind of take a look at more like intraday price action, right? And I'll, you know what, I don't know, do you guys want me to leave on the like session indicator thing, or like do you guys find it just annoying? Like it's up to you guys. On or off? Off? Okay. Yeah, I figured. I'm like the only one that actually like likes it. I feel like it's useful for me, but I get it. It's really ugly. What we can even do here is I'm actually gonna hide like this daily, and all I'm gonna do is instead of hiding, I'm just gonna push it all the way to the left here. I can't remember what this is. Is this a 4-hour like wick or something? Yeah, that failed. So I would actually delete this. It's pretty ugly. So yeah, let's do that. We'll go to, we can even capture our 15-minute, right, to make it look better. I'm not gonna do it because it's just an example anyways. It's not like you guys are gonna use that, like the one that we're building in here. I have like a clean example. Honestly, it has my sessions in it, so like sorry about that, but like my session indicator. But you guys can always like look within the link that I sent in the announcements. It's in there. Enjoy. You know, duplicate it, do what you want. Again, credit goes to Aaron because he's the one that built out like the actual like database structure and everything. So go thank him, not me. I just copied it. But it's a really good like setup, which is why I copied it, right? So let's go on the 5-minute now, and let's just very quickly take a picture of this too, right? And again, you can take notes and say, okay, this is what we're looking at in, like from an intraday perspective. Again, I can cut price back to like pre-London, if anything. That's kind of how I do it. But we can also just do in hindsight. So we'll do that, and then we'll play through it and look for our entries at each zone. And you guys will see in a second, right? Even though it's hindsight backtesting, there's actually like a ton of value in this. Again, I think there's almost more value in this over like you going in software FX or even trading view and just doing bar replay and trying to take like random stuff with no structure or like no model that you're following, right? This is like a very like detailed way of doing it. And I think overall, because it's so detail oriented and you're taking your sweet ass time going through each and every like entry here, you're gonna end up actually like learning and like retaining more information compared to scrolling through like, you know, a whole month of software FX price action in literally like a span of an hour or whatever it is, right? And listen, I'm guilty of doing that. I've done it on like previous backtesting calls, right? Because like obviously I want to show you guys like how to run it that way, and you can do it that way, but it's better to have a model and like stick to it, right? So we're gonna do it like that. Okay, so let's now like play through the intraday price action Monday. Again, we know it's a bank holiday, not expecting much, but we ping into our first POI, right? These 15-minute wicks, which is also a flip zone. You guys see how this is a flip zone? We're running this demand out of the market. So I'll call it a failure here. I forgot to mark these as 15-minute, but you guys know that it is, right? Maybe I'll quickly do it. Oops. You can also do this, right-click template. This is actually faster. I don't know why I don't do it this way. Right, so those are all 15-minute zones. This one's just a failure zone, or like a flip zone, whatever you want to call it. I don't have templates for this, so I'll just type it in. You can literally copy it the way that I do it. I don't have any like difference between, like you'll notice all my boxes are the same color too. I don't have a difference between supply and demand, because we know if price is coming in from the top, it's demand. If it's coming from the bottom, it's supply, right? So I don't need to color it like red versus blue. I'd rather have like red saved for when we have actual failures of certain zones, right? So our flip zone, or demand failure in this sense, right? That makes sense why this actually held, right? We took this out, we broke like these minor structure levels, right? We showed bearish intent, and now we're coming and tapping back into it. So now what we can do is we can look on the 5-minute. If you're a 5-minute trader and you take 5-minute entries, you look for your model. If you see it, whatever, take it. In this case, we're gonna go on the 1-minute and we're gonna see if we actually tap into it. So I think I took a picture of the 5-minute, right? Yeah, okay, good. I posted that. And now we're going to do our entire London thing. The way that I like to do it, it depends on what you want to do. Either you can take a picture of each entry and like do like a little like line drawing, and we'll do that for these as well. Or you can do the entire thing, take a snapshot of the overview, and then take pictures after the fact and like maybe make notes or whatever. I like using the bubble tool or taking notes like in here to explain, you know, kind of what's going on with it, right? So okay, here's our first entry. We're gonna start looking for it. What's kind of weird about this one is we obviously had like liquidity sitting here in a sense. If you wanted to really dig into it, technically we swept this. I'll zoom into it so that you guys can see on the 1 minute. Also for this session, guys, I'm just gonna mention like we're not gonna necessarily go on the like seconds, with the exception of like reading into liquidity. So I'm not looking to actually trade off of a 15-second or 5-second or anything like that. I'm purely going to be using it to assess whether or not we have like liquidity in our lower time frame entry model, right? So again, if in your plan you take risk entries, then you would literally put like a risk entry off of one of these candles, right? That's not part of my plan. I wait for a retest and like a flip zone and liquidity and everything. I'll show you guys. But what I am going to do here is mark out this sort of like inducement that we had, right? So obviously this is the 15-minute candle. We can even use Sam's trick. I forget what tool he uses, but what you could do just to get like a very accurate representation of what this 15-minute zone was, these wicks, is I think you can do, it's weird because it's wicks though. If it were an actual candle, you'd be able to mark out using like the vertical line tool. I don't even have it here, but you could use the vertical line tool to kind of mark out, okay, basically the start of the hour and then 15 minutes into it, right? Kind of like this, and then get a sense of what the 15-minute candle would actually look like, right? So if I were to mark this up, you would see that's the 15-minute candle. There's another tool that he uses. I can't remember. I think he talked about it in his most recent Zoom, so you guys can check that out. It's a very good Zoom. But yeah, so let's look for our lower time frame entry model. And if you guys want to like unmute your mic and talk through it with me, we can do that too. Or we can kind of mark it out. Just try not to make it too messy with your line tools and stuff, right? So the first thing I'm going to look for, because we've tapped into this 15-minute POI, is number one, our change of character, right? On the 1 minute. So I'm going to wait for a take of the high and a take of the low. So I'll denote this with my blue lines here. So I'll just say this. And the fact that we wicked this and it's so far away, like that's enough for me, right? And now let's see if either we come to the extreme, and if like obviously we can mark out like our flip zone that we have here too, right? This failed, you guys can see that. We could even say this was our change of character, right? Because really like this was the last like bearish push before popping up into the zone, right? And then that failed as well. And so if your entry model is just to take straight flips, you can do that. But for me, what I'm looking for again is like lower time frame liquidity, because I want like these high probability type entries, right? So what I'm gonna do is I'm actually just gonna like leave this open. What we should actually be doing is just seeing if it even plays out first, right? So it looks like we're starting to pull back up. If you guys wanted to take an entry here, you could. For me, it doesn't look like it really sweeps liquidity. So what I'm expecting now is that potentially this is going to be used as inducement. And what's sitting above it, obviously this is, right? I'm going to include the wick on it too. So let's see if this actually plays out. I don't think it does. It looks like it just taps into the decisional, right? Okay, it does sweep it, but it doesn't come to our zone, I don't think. It actually comes to these wicks here. So technically, like that would be valid if you know, you got to be honest with yourself with these two, right? Would you have marked that out in a live market? Yes or no, right? What do you guys think? Is this like, do you think this is realistic? Like, would you actually mark this out, and would you try to take it off of these wicks, or would you not use this in sidebar? You wouldn't, right? I wouldn't either. Honestly, I wouldn't. So yeah, exactly. I would have used that. So what we're going to do is just leave it like that. And we can leave this on because then we can see, okay, this is what it actually reacted to. So just so you guys know, again, I'm using like my EQ tool here. I'm actually kind of copying what Blackwatch does here because I really like it. this is how I denote where I would potentially have entered, right? Because I want to see, would it have hit EQ? Would it have hit just the edge of it? But I don't really trade off EQ, so it's just like a way for me to distinguish it from like these zones, right? Because if you have like a lot marked out, it gets kind of messy, right? Yeah, the wicks don't react to anything either, so yeah. So here's the thing, right? Even for me, if I were gonna take a picture of this, you can leave it in here, and you don't need to take a picture of this either because there is no entry. But this is what my model would have been, right? And I would have again seen all of this as just liquidity, right? That's fine, doesn't tap into it, it's all good. I won't even bother putting it in, but it's cool, right? We can see our model almost played out, right? We read this as liquidity, it wasn't actually a flip. You would have got a small short term, like basically a pullback off of it before getting swept, right? Let's see, let's push price on to the next one, right? So here's our next entry, right? We got another lightning bolt. Yeah, I love blue. Sean's talking shit about the fact that everything is literally blue on here. Not my failures though. These are red, Sean. What are you talking about, man? Oh, the one thing I actually forgot to mark out here is like 15-minute changes of character. So we should quickly do that. Where do you guys see the 15-minute change of character here? Why are we bearish? I already mentioned it before what it was, right? We actually did mark it out already. But the reason I wanted to mention it is because I actually have a red tool for it. I just want to prove Sean wrong here. See, this is how I mark out my changes of character. So my true change of character here would have been this high and this low. It's the same as our like swing structure essentially, right? This is literally the point where I'd be looking for shorts when this failed. Yeah, okay, exactly. Good. I'll take that, Sean. That's not pink, that's red. Look. See? But to be fair though, Sean, like it is true, I do like blue a lot. My 15 second, or not my 15 second, my 1 minute change of character tool is actually like turquoise. So that's pretty close to blue, right? You're kind of right. Okay, so let's do this one next, guys. Liquidity, right? Again, if you guys want to mark this out with me, mark out the change of character. I want to make it a little more interactive. I don't want to do all the work here, I'm lazy. Where's my change of character, guys? Mark it out, mark it out. Okay, I'd say it's a little higher than that. Esteban, you're close though. Again, it's a little subjective, but okay. Okay, that's what I expected. So there's two ways that I would look at it. Personally, like I would not look at this as a change of character. Like that's pretty aggressive. So it's not that one. What I would look at is actually the one in the middle. And some people are even marking out these ones all the way up here. That's more of a 5 minute change of character, if anything. If we pop to the 5 minute, you'll see it, right? But what I would look at is just this, right? Let me clear your drawings really quick. 1 second. Clear all drawings. Good. Okay, so yeah, it would literally just be this. This is my change of character, right? But yeah, you could say this is too, right? If you want to be like way more conservative with it. But again, this is like really more of like major, I would almost say this is like major 1 minute structure, right? I'll mark out both. Like it's good to kind of like look at it, but like this is good enough for me. It is counter trend, like to be fair, right? Because we are bearish here, right? But we've also tapped into a 15-minute demand zone, right? Which is like pretty clear, which also swept.
Hey man, I got a quick question.
Yeah, what's up, Drew?
Why would you consider that a change of character, like for the 1 minute? Because
For the 1 minute?
it doesn't really make a high right there. Like it's just like a supply level.
Yeah, so it's the fact that it actually like swept the supply out, right? I'm almost looking at it like similar to the way that Alex Turkey looks at it. I'm waiting for like a break of supply. And this is clear enough too. Here's the other reason, right? Look, this pops down and then like literally trades higher than this wick. If this inside bar was just kind of like the wick was down here, then I'd be like, okay, whatever, screw that, right? But yeah, that's pretty much why I'm looking at it. And again, like for change of character, you can be somewhat aggressive. Like to me, this is, it's not like major 1 minute structure, but it's minor and it's enough, right? To show me that potentially this is the first like momentum shift that we're going to see on the 1 minute that's going to lead to a larger overall move, right? So a lot of people are marking out this flip zone here. That's fine, we can flip that out, or sorry, we can mark that out. So to me, this would actually be, yeah, I'd say this is like pretty valid for a couple reasons. And this is one where it is just a straight flip zone and we can kind of trade off of it. But look, we have liquidity that's built up kind of before and after it, right? So the reaction itself actually like swept liquidity and then blew through, right? Do you guys see what I mean by that? I'm gonna go on the 15 seconds so you can see it more clearly. It actually isn't the clearest on the 15 second, but I'm kind of looking at this, right? We kind of swept like these like very, very minor lows here, right? So technically I would actually want to include this in it, right? Either way, we're going to cover the low for this, right? For this flip zone. But what's the other reason that I'm kind of looking to take this, right? Because we built liquidity here. Now, we go back to the 1 minute. Right, again, I'm just trying to follow the model, right? If I don't see liquidity here and we just come tap right into this, I'm personally not going to take it. I know a lot of people in the community would. For me, like, I take too many L's like that, so like I actually like made my plan more conservative to stop that, right? But again, if that's within your plan and you take straight flips like that without liquidity, or maybe you're not aware of the liquidity that's there and maybe, you know, go investigate it, then, you know, you can put that on like that, right? But again, the whole thing is, look, swept liquidity. I've literally taken out a supply zone, so demand is now in control in a sense, right? Again, if we go to the 15 second, you can see the liquidity that we built here. We're even kind of like chaining to a degree, right? Because look, we have this demand, we swept this liquidity, we tapped into it, we pushed up, right? Even this, you can see this is like pre-chalk liquidity, right? We swept, we pushed up. Even this supply filled, right? That makes sense. So the other way that you could read into it, again, like I don't want to like dive too deep in the 15 second and confuse you guys because I want to keep it simple. But this supply zone technically like built liquidity, right? As well. And that swept it. This is all just the read of liquidity here, to me anyways. So let's see if that plays out. Again, I don't remember if it even taps us in. Might not. Okay, we're in. Good. Look at that. So there's the model played out, right? The other way, I guess you could also look at this too. Again, if demand is in control here, why are we reacting to these supply zones here, right? Again, it's just to build liquidity. We're building liquidity. You see all the liquidity that we built up prior to our actual flip? Like, this is relevant to me, right? Somebody's like putting a question mark. Do you want to type out or go on the mic and ask? I don't know what you were asking there. You hear Brian's voice in your head. Yeah, that's who I got it from, right? Build liquidity, who's in control. So thanks, Brian. You got to give credit to Brian for that because he's the one that like pretty much taught all of us that, right?
Can you hear me, bro?
Yeah, I can hear you. What's up?
Yeah, what's up, bro? I just want to ask you, like, would you consider this as a flip? Like, we have a supply and sell to buy, like I made it in here. Would you, like, for example, like confirmation of a confirmation?
You could, but, and you know what? This one's not bad either. Again, I'm going to go on the 15 second because I know if it's hard for me to read on the 1 minute, it's probably hard for you guys to read on the 1 minute, right? Let's go on the 15 second and actually like assess that, right? Okay, so you're saying this is a flip zone, right? Because we're reacting to this failed supply, correct? Is that what you're asking?
Yeah, but kind of like more of the supply. If you see, like here, like we tapped the supply and this overall? Is the sell to buy that took out. Yeah, so we kind of communicated in here.
I wouldn't be looking at this so much as like the one that's more at the edge, right? And why would I look at this? Remember, I'm always using the same principles over and over too, right? What's swept liquidity? Even though it's like it's counter to like the trade idea that we have, this swept liquidity, right? Kind of created this supply zone to kind of fake people out, right? Into trying to short this, and they get like basically uses liquidity, right? Liquidity to fuel the move up, right? All the stop losses here from the people trying to short, they get squeezed out of their shorts. Makes sense? Yeah. So I would look at it like this. Yeah, this is a fair, I would say this is a fair like scale in. Our setup already played out, right? So I can start being aggressive and take actual just like straight up flip zones. But here's the other thing. Even with this, look, we built liquidity here too as a result of this, right? This supply zone.
So whenever like you have a supply that swept liquidity, you make it like the one that you want to see a flip. You, for example, you have a one that swept liquidity, and then just a normal one, you will give like priority flip from the one that swapped liquidity. Is that what you mean?
No, so usually what I'm doing most of the time, and again, this is because I changed my model a little bit to be more conservative. Like I'm trying to be very strict with it, right? A lot of the time, I'm just using flip zones to anticipate like potential like sweeps. Now the thing is, I miss a lot of stuff because of it, but it keeps me out of a lot of like trades like the one that I originally showed you, right? Up here. I know a lot of people were marking out here. I'll go back on the 1 minute so I can explain it. A lot of people were thinking, oh, okay, let's short off this. And yeah, you did get a move, but then you got to use this liquidity, right? So a lot of the time, flip zones will be used to like build liquidity, especially if like the other side of the market is in control, right? In this case, it's supply was in control, right? We can see that. Obviously, we tapped into this and then we started blowing through all of these demand zones, right? And they kept failing, right? So supply was in control for this one. And again, I mean, obviously we tapped into this demand to build liquidity, right? And then eventually we swept. Well, we didn't actually sweep into this one, but you get the idea, right? Same thing happened here, right? I'm almost looking at flip zones to build liquidity for me, but if price starts like chaining, or like I see my model or whatever, and I see that it's just building, like I would even take like a straight flip zone like this, right? As long as liquidity is built, either before and or after the fact, right? And so you can apply the same principle to your re-entry if you want to be conservative about it, or if you want to just take straight, zones like this. Like again, I wouldn't have even seen this, to be honest with you, because I would stay on the 1 minute. But obviously, if we dig into it, we can see there's a doji here. We built liquidity after the fact, right? This liquidity was kind of built by like this supply up here, right? And then we sweep this liquidity, and then we even retest it a second time, right? So this would be like a valid re-entry, technically. But I'm not going to add this in for my like screenshot or whatever. You can if that fits your plan though, right? Like I would say define your plan. If it fits it, of course throw it in. And if you take an L because of it, throw it in too, right? I'm gonna be realistic. Remember, like we always have to think, and I know this doesn't relate so much to your question, but it's just more of like a general advice for you guys, because I've been like kind of digging a lot into Mark Douglas's like trading in the zone, not his book, but he has like a YouTube series. If you guys search for it, I think it's called like Trading Psychology. It's some like DVD masterclass. It's basically like very similar to his book. He just talks about, again, thinking of trading as basically letting your edge play out. You have to have that probabilistic mindset in a sense, right? You're not like living and dying by every trade, right? You shouldn't be when you're trading. You should always be looking to let your like edge play out, right? You are going to take losses. It's inevitable. And if you have like trouble taking even a single loss, like you better work on your like psychology, because that's going to hurt you in the long run, right? So so just some general advice for it. But that the whole reason I'm saying this anyways is to make the point that if you take a loss with your model, like you should be happy to take it, right? It's okay to take a loss. Like it's just part of your edge, right? Over a series of 20 trades, maybe you're going to win like 5 of them. You have a 25% strike rate, but you're pulling over 5R or more, 10R out of each of the winning trades, and it's minus 1R for the other ones. So you're going to be like pretty wildly profitable with that, even with that low strike rate, right? So
exactly.
So anyways, this one plays out. Let's quickly look at targets. Okay, we know that this is a bank holiday. We should probably be like pretty conservative with what we're targeting.
Thanks for the answer, bro.
Yeah, no worries. And it's a good question too, so I'm glad you asked it. In terms of targets for this, I'm just going to go straight 5R for this. I don't know if it actually taps into it. What you could do even is, again, depending on how you guys manage your trades, right? If you set break even at like this major like swing high or whatever, you would set it at this. All I would do is I use like, again, another one of my templates here. I'll put SL, right? And then I'll kind of put it in cover commissions like this to show that I've like quote unquote gone break even. If you guys do 1 to 4, you take partials, the way that I would mark it up. And what I've done in the past is I'll go 1 to 4 like this. I'll put my line here, and then I'll do partial TP, right? So we know, okay, I took 20% off of this. So you can even like say like 20% 4R, right? I'll save a template for that for you guys here too. That makes sense? So now I know, okay, I would have in theory been like break even, whether, I set break even here because we broke this high. Personally, I wouldn't have. Like, I think this actually blows through it. I can't remember you even go any higher. But those of you who manage it this way would have been break even. For me, again, I'm gonna wait till like this high gets broken to show that we're really out of like this trading range. And then again, for me, like I would have personally set my TP to like a hard 5R. So I think we actually hit that here. Almost. Did we hit it? Let's see. Yeah, we did. Just by a tick. Here's the thing. I don't know if spread would have actually like had us hit it, right? And then again, for scale-ins, look, somebody even mentioned here. Yeah, you could technically take this as a scale-in. You know why though? You guys see why I would take it as a scale-in? It's not because price is just retesting it. There's a reason. Look inside of like the leg. Why am I taking it? And let me see if you guys can get this right. I'll zoom into it a bit. You can draw it out too. I'm looking for a very specific thing to try and re-enter this. Like, why would I re-enter here? Yeah, the liquidity, exactly. And the fact that it actually broke this too. That's a good point. I didn't even like think of that. There you guys go, right? For those of you that marked that out, yeah, 100%, right? We already got our thing playing out, and now we're just chaining our supply and demand. And yeah, of course, we could come down to this. This could be used as liquidity. Absolutely. There's a good chance that can happen, right? Again, look, if I'm looking at it from this perspective, or I'll leave this here, and we see this supply here as creating this liquidity and then obviously failing, right? This is also a flip zone, but this flip zone could be used as liquidity to fulfill our, what is it? Basically this down here, right? So this is starting to get a little bit messy, but you guys get the idea, right? And yeah, of course, that's the other one, right? We are also chaining supply and demand, or sorry, demand here, right? We're starting to get bullish order flow. So either this is going to get used as liquidity, or again, look, built liquidity here. Let's see which one. Where do you guys want me to place the order? I'll tell you where I would place mine. First of all, I would have like entered this already, right? Except I don't know if I would, because we wouldn't be break even yet. I would actually stay out of this. I would enter it now, right? So it's either between this or this, these two, right? I honestly don't remember what happens either, so let's see. The higher one or the bottom? Like, do we have a lot of momentum in the market? That's probably the first question I ask myself, right? Like, not really. It's a bank holiday. What do you guys expect is going to happen? We're probably inducing. Yeah, probably what I would do. So I know I said I would obviously like enter this and everything, but oh, and actually no, sorry, you would be break even, so you could enter this, right? Again, it depends on like how aggressive you want to be with your scale-ins. So like, I'm not even gonna put this in. It was more of a lesson to explain, you know, why I would potentially enter this as a scale-in, right? It was the liquidity, but again, this could get used as liquidity, and I'm almost hoping this doesn't hit it, because I kind of want to like give you guys another lesson on this really quick too. So we'll give it 1.5. We'll give it a bunch of buffer. Okay, it actually does respect that one. Cool. So that's good. So what's the reason I was like kind of hopeful that it wouldn't do that? Here's a lesson I want to give you guys. Even if it does like, you know, tap into this, yeah, obviously we got like our demand chain and this held, so we can actually put it as that, right? If you were being aggressive with it. Even if you weren't being aggressive, this still technically like fits the plan, right? But if you left a limit here and you didn't get tapped in, like, don't sweat it. Don't let that like tilt you. I know for some people, they're like, oh man, like I missed this trade, like I knew better. In hindsight, they'll probably talk to themselves and say something like, you know, like, oh, I would have taken that, like, what am I doing, right? And they like beat down on themselves, right? Like, to me, that's like a really dangerous way of thinking, because number one, you're literally like tilting yourself. And what you're going to start doing is maybe being more aggressive, because you're like, either you're taking a break even, or like you're missing, you know, a trade like that. But for me, it's like, what's my number one goal? It's capital preservation, right? So even if I miss this, because again, we don't know what's going to happen, right? Like I said, this could be used as liquidity to tap into this, right? At least like within this like price action that we're playing here. Kind of lost my train of thought. But my point is, like, yeah, don't kick yourself over like missing your limits getting missed, right? Like, this is still like a good place to trade off of, pretty much, right? Again, using this as liquidity, because technically this is a demand chain too. This could be used, it could get swept, right? And obviously, like, this is almost like a better quality area to enter. You're getting in at a better price. meaning you have more potential R to pull out of the market, right? So had we got tapped in and price played out that way, we would have been able to basically hit almost 5R, right? You compare that to this, right? Just being like a few pips higher means we're literally shaving off almost 2.66R off of our trade, right? So we're not able to hit that, right? So in terms of like targets for this, again, we're in a ranging market, it's a bank holiday. Let's see if we even hit 5R with this. Or if we hit break even. I don't even think we hit 4R. So like this would actually be an L, right? Potentially. So I'll put it up to 5R here. For me, I'm not gonna break even until it comes up here, and like, yeah, let's see what happens. And where are we in price too? Okay, we're coming into New York now, right? Let's see. Price is just ranging like crazy. Okay, retests. Like that would probably make you guys sweat. You're sitting through all of that, right? You could say this is another entry, but it just makes equal highs. So now we're actually building even more liquidity, right? Now, it's not to say I want to necessarily leave a limit order on the bottom one, but this is what I mean, right? You don't know how price is going to play out, and you shouldn't be kicking yourself because you missed it, because you essentially, like, in this case, like, look, I think we're going to, like, if you didn't take this trade and you just left the limit on this, like, lower, like, extreme, you would have actually saved yourself from taking an L. Does it take an L? Oh, no, okay, it hits. This is just a weird one. So there you go, right? Again, we didn't know what was going to happen. This is still a good trade overall, right? So we hit our 5R. If you wanted to hold it higher than that, you could have, right? But does that whole thing, like, make sense? Like, from a psychological perspective, why? I just want to drive the point home with you guys, right? Why you shouldn't kick yourself over missed trades like that. You still caught this one, right? You shouldn't care, right? And even if you don't catch any of these, like, same thing. Don't like start over trading or getting overly aggressive because you miss stuff. Like, this is a common thing people do, which is why I'm mentioning it. Okay, so that's good. What we can do, again, I'm just going to show you guys for the sake of it. Like, we technically get like this and a scale in, right? I'm going to take a picture of this entire thing, whatever, frame it as best as I can, and then same thing, right? I'll just put it as entry 1. And this is where I'm going to put like longs. What else? What did we pull? 5 plus 5R, right? Or we can say 5R plus 5R plus 5R scaling, right? So now I can put, okay, we've made 10R now, just on that, right? Assuming that we're risking 0.5%. If you're Canadian, which I know not a lot of you guys are, this is what you take home after profit split with one 100K FTMO account, right? So there you go. That's cool. So let's keep on playing price forward. Oh, we're already an hour in. We're not even on Tuesday. So I'm going to start playing through this a little bit more quickly. Maybe we'll skip to the next day because I want to give you guys like better price action. Let's do one more here and then I'll skip to like Tuesday. Okay, we tapped in. Let's see if this one shows our entry model or not. We have another lightning bolt, right? So as I'm doing this, do you guys have any other questions? Like, does this all make sense so far? Give me a yes or no. And if you have questions, obviously type it in chat. Unmute yourself. You're welcome to ask as much as you want. That's the whole point of these Zoom calls, right? I want to try and teach you guys skills, give you questions. Oh, look. Okay, look. Yeah, sorry, go ahead.
Perfect sense.
Makes perfect sense. Good. So look, as Blackwatch said, we actually tapped into, yeah, it looks like the lower one, right? So this kind of like drives the point home of like the whole argument that I was making before. Even this one got used as inducement, eh? That's pretty funny. You guys see how we actually tapped into this later on? And then like, technically you could have left a limit on there. For me, like personally, I'd wait for like the setup. I wouldn't want to like necessarily leave a limit on for that long with price like running on like that. But there you go, right? This does end up getting used as inducement, just as we kind of suspected, right? Because we didn't really, like, I know I said this was a demand chain. We didn't really mitigate this though. Like we came into like 2 ticks of this entire like inside bar, right? Now we've actually tapped into it. Yeah. Within like almost 50% of it too. So pretty cool, right? If you feel comfortable and that's within your plan, you could put a trade there and document it, right? And then set your targets or whatever. For me, I'm gonna wait for my change of character. Even though we're getting like a retest and reaction here, I want to see that we flip, because like this is super bearish too, right? I want to see that we flip, back on the 1 minute into like bullish price action. So I want to see something clear, right? For me, like I don't really see anything super clear here. You could, okay, I guess you could say like this is a change of character, but I think this is kind of stretching it. Aside from the fact that it hit obviously this refined zone, like that's really nice, right? I just know for me in a live market, like I would not want to leave a limit on that, right? And I wouldn't necessarily want to say like, okay, take the low and take this high. Like we could say that, right? But this isn't even in the same leg, right? But in theory, what you could say, and again, it really boils down to like how you see the market, right? You could say that, okay, we have a supply zone, it gets run, whatever, builds liquidity. And I'll show you technically how the model plays out in this too, right? So we'll say like this inside bar. Right, do you guys see how we kind of like built liquidity here? And then we basically tap into this to continue our demand chain. This is the liquidity that I'm talking about here. So yeah, it's a flip zone, right? Obviously, like in this case, I'm taking the origin, right? And yeah, even this supply gets run too. Thanks Shane for marking that out, right? This really is just liquidity to me. Like this internal stuff here, right? That's kind of getting a reaction from this supply zone before like blowing through it. And I know we wick it, but we're still violating this supply zone enough that, it's showing us that like, again, there's bullish intent, right? So then I would look what's sitting below the liquidity, this, and then you could slap your entry on like this, right? And then in theory, you should run. Hey, what's up?
Yeah, I have a quick question.
Sure.
Let's say that in this case, that small reaction that you got from the supply zone, right? If that reaction, in this case, the reaction created liquidity because there's like equal low there, and then like in that case, you'd say, oh, so the reaction actually created the liquidity, so it's inducement for the origin, which is what happened.
Yeah.
But when there's cases when the reaction, like it sweeps the liquidity that formed right before the reaction. I don't know if you understand what I'm saying.
Yeah.
In that case, you use the reaction as the entry, right? Because it just swept the liquidity.
Yeah. So again, depends on your entry model. Does your entry model have that? Is that what you look for? Because that is something that like you could, for me, like let's draw it out, right? Let's actually draw it out so everybody understands here, because I think just talking about it isn't enough for those of you who are like more visual learners like me. Like I actually even kind of struggle with it, right? So let's actually draw out this entire thing. We'll use the line tool because I think this is a good lesson to kind of run through this, and then we'll continue, right? So I'm just gonna draw out, right? Okay, so this is this bearish leg I'm drawing, right? Price pops up, right? So here, I want you to tell me where would you want to see the liquidity before the fact? Is that what you're talking about?
Yeah.
Okay, so let's draw this out. Okay, so this pops down like this pretty much. So this would be our origin, right? So you're saying if we did kind of like this, right? So we built liquidity. Oh no, sorry, it would be the other way around. Let me redraw that like this. Okay, so our major leg, right? We push down our supplies here. Our origin. Okay, actually, I guess it would be kind of like something like this. I have an idea of what you're trying to say, right? So okay, we tap into, and you tell me if this is what you're talking about, Michael. Okay, we tap into our supply and then we sweep this liquidity, right? Is that what you're talking about?
Yeah.
And then we pop up like this, right?
Yeah.
Yeah, I'd say this is more high probability than just taking a straight flip zone. Now here's the caveat like I want to explain to you guys too, right? Because I know like Sam and Alb will take straight flip zones. The thing is, they're very good at picking out not only refined POIs, but like POIs in general, right? Which enables them to take even these like super aggressive zones that don't necessarily, or like LTF, like entry models like this that don't necessarily always have like that liquidity, right? But more often than not, I think the ones that do work out that they post, they actually do have liquidity, but sometimes you'll see them post it without it, right? It's because they're able to identify, and they're doing it on the 5 seconds sometimes too, right? So I just want to like give them a little bit of an explanation as to like how they're able to do that. for me, I'm not good at doing that, so that's why I wait for this, right? I wait for the liquidity. But yeah, for this, the thing is, you're saying that you're getting like almost liquidity pre to the failure of the reaction, right? So I'll draw it out here, literally like in the diagram too, right? Kind of like this. Well, technically this is like a reaction in and of itself too, right? But say I move this down and it's kind of like this, right? If I look at my models here, let me see. I have it drawn, not drawn out, but like print out in front of me here so we can refer to it. You guys won't be able to see it, but I'm looking at my like printed out versions here. I do have a model that does this. Yeah. So, well, actually for the most part, so we form it. Yeah, I'd say this is valid, pretty much, because it builds liquidity. Yeah. So just so you guys know, this is what I'm talking about, right? Build liquidity, and what Michael's talking about too, right? We do this, in this case, like, whatever, whether it like reacts to it or not, right? The whole point is we're building like liquidity pre to the, reaction, and then like the failure of that supply, and then we're retesting pretty much the origin. Does that make sense? So it's weird because like if we have like 1 minute price action, sometimes this is going to be really tight and you're going to see it as wicks, which is why I suggest like analyzing it on the 15-second. You'll be able to see this liquidity a lot better, right? And then again, what you can wait for too is kind of like this like liquidity instead, right? Where we almost have, whoops. If you want to have it like a little bit more like high confluence, sorry, I keep using the wrong tool. We can wait for something kind of like this, right? Where we're essentially like building internal liquidity like this, right? And then we can kind of take it like that. So I'm essentially saying, let me draw it with this. This pops down, builds like a little bit of liquidity like that, right? And then we can enter off of this. So this is just like a further confluence. But for me, like I want some sort of liquidity, whether it's before or after here, after the reaction to build. And ideally, like I like personally just like when the reaction itself builds liquidity like this. Let me delete these drawings really quick so you guys get this a little bit more clearly. Where it builds liquidity like this, and then, whoa, that's weird. I've never done that before. I didn't even know that you could close a polyline. Basically what I'm saying is we use this as inducement, right? And then price does that. And that's pretty much what happened on like this and the previous one, right? Now the thing is, you can get away, and this is like the weird thing about it, right? Because price is so tight in this particular setup, you could have gotten away with just taking the straight flip without even waiting for this liquidity. Obviously you would have got tapped in here, right? And then you would have sweat as like price came back and like retested it, right? If you didn't go break even. And you really shouldn't be going break even that early anyways, so. But yeah, does that make sense? Hopefully that answers it.
Yeah, thanks, man.
Yeah, I'm basically looking for Dorito liquidity a lot of the time. But it's not just Dorito liquidity, I'm looking for, remember, I'm looking for actual like, basically a failure for price to continue lower, right? Is what I'm looking for as liquidity. So the fact that this didn't fail lower like this, using that as liquidity, right? So little mini lesson for you guys. And Michael, like that's a great question. I just want to say like thanks for asking that, because I'm sure like everybody else had that question too, or a few of you probably did, and now like it's probably clearer for you guys, right? So very good question. So let's see targets for this one, right? Because this is a good like. I'm actually surprised we got an entry here because I wasn't expecting it. Again, just seeing this wick, I thought, okay, maybe we just tapped into it. Again, personally, I wouldn't have left the limit on this, right? But look, we get the re-entry here, and it's even though it's not within the POI, if we just draw out like our equilibrium tool, where are we, right? Do you guys see why like this is still valid? I'm still within like the lower 30%, even like 25% of EQ of this leg, right? Even if I drew EQ like this, right, it actually makes it better, right? Because this is kind of the range that we're playing in. It's still in discount, so we can play it. We can play the range. Even if I mark it out like this, right? As this entire leg as our range, right? Same thing. We're still like very deep in discount. We're within like the 30%, 25% of it, right? So that's good. Now here's the flip side of it. Unless we're in like a super high momentum market and we're like violating the shit out of like these supply zones, these are getting blown out, right? We're kind of forming new trading ranges and stuff. I'm not going to look to try and find my model here. Even if like a 15-minute candle comes and like we retest it, even if it builds liquidity, you know, stuff like that. So does that make sense? Like because I see people do that too sometimes, right? You'll try to like take longs in premium. You know what I mean? Did we get a 15-minute chalk? Yeah, I'd say so. Like if we're looking at like just like recent price action, yeah. So I know we were originally like looking for shorts, right? Where is our 15-minute chalk? Do you guys see it? I'll let you mark it out. At that low, okay. And that high, yeah. And it's a little aggressive, right? But because we're looking now at like minor structure as our change of character, right? But yeah, I would agree. We technically close above there, right? You could even say you could wait for this, right? This fail of this like major 15-minute supply, and that's another way you can consider it, right? But then maybe you wouldn't take these. So yeah, for me, I'd say this is. Oh, that's good. It's good that you mentioned that, so we're like aware of it. We keep on marking that stuff out, right? So anyways, that is pretty much all of Monday, which is a bank holiday.
Just one question.
Yeah, what's up, Miguel?
The chalk, we can consider it even when it is just weeks, or it has to close above or below.
You can, depends how big the wick is, right? It depends, right? Like, so it depends on how you want to look at it. I'll do wicks, like that's fine if you want to be aggressive with it. But look, this actually closed above it too, so that's like good for me. And
because
and
I was considered in this week here.
So back here, you're saying?
Yeah.
Yeah, I would still. Like it's pretty big, right? It's bigger than like the previous candle even, right? And look, we were even taking longs before that, right?
Yeah.
And why were we taking longs? Because we tapped into this 15-minute zone. And then if you really want to dig into it, like, again, this is not necessarily like a change of character. This is more of like, it's almost what like, I know Aaron would call it like a fake change of character, or you can call it a 5-minute like boss, right? Our very like tight momentum shift. Let me go on the 5-minute because it's really messy, right? You could say that, you know, even if we miss this, right? Or even this, right? You could say this was our like 5-minute change of character, or even our 15. Let's see what it looks like on the 15, right? I know it's hard to see because we have all like the tools, but you guys see like this doji and this wick. You could consider this like our fake change of character. It is very premature though, like don't get me wrong, right? We're coming from a really bearish market. So like in theory, we really shouldn't have even entered this. But the fact that we again came off of this 15-minute zone, right? It's starting to chain a little bit, right? We're basically tapping back into this 15-minute wick, right? That's swept liquidity. Like there's a lot of reasons why we can look for it. And if, you know, we were in a short or whatever, you could see this as a hedge. So really this is more of an optional trade, but I'd say like this one's better, right? Because it happens after that change of character, right? But then what's even better than that, right? If we look at like the actual play of the day, right? Assuming we didn't trade London, it's really just, you know, when the real change of character happens, which is this high, right? Getting broken. So we break that high, we obviously tap back into the origin, right? And then we get our actual entry. So again, depending on how like aggressive you are with how you mark out your changes of character, like this may be the only like valid trade, right? And maybe you're only targeting this high for 7.2R, right? And there you go, you hit TP right on the dot. I actually remember this one. So now I think we are, what is this, like 1 p.m. Eastern? I wouldn't even look for a trade here, so I'm just going to delete this. And the thing is, it doesn't even really come into the zone either, right? I'm not looking for a trade that late because I'm going to tell you what's going to happen right now. Look, we're going to range. Look at that. So you don't want to trade this price action. Plus, look, now we're in spread hours too, right? What's the point of trying to take a short here, right? You could look for your entry model to practice it, obviously, but yeah. Hopefully that answers the question. It's good that you that you asked that too, because again, probably people were wondering, right? And yeah, like ammo, to answer your question, waiting for the second chalk is safer. Absolutely. Like these are super aggressive, right? To try and enter these. But again, maybe it's not that aggressive because remember we're playing off of this, right? We know like supplies and demand. But again, we are trading counter to 15-minute structure, right? You guys are aware of that, right? Obviously we broke the structure. Like this is still bearish, right? technically, like from a 15-minute perspective, supply still is in control, right? Until we violate this, right? Or even this one, like, so yeah, that's that. Let's go back on the 1 minute and I'll show you guys how to just like quickly take the overview picture, right? So what I like to do personally, again, like for me, I like seeing where we are in our session because that helps me kind of like identify when the trades were. I don't like looking at like the time. It just takes too much time for me to do it. I like having a visual reference so I can just see, okay, this was London, here's London open, here's Frankfurt open, right? This happened an hour and 30 minutes after Frankfurt open, right? I can just tell by the size of it, right? An hour 30, right? This happened what, like 5 a.m. my time? So that would be like, or no, 5:30. So that would be 10:30 GMT or BST, whatever it is. I don't know if you guys, are you guys still on BST? Those are you who are in London, or are you in GMT now? Like, did daylight savings happen yet? Whole thing is annoying, honestly, because it confuses me sometimes. I'm guessing it didn't, right? Anyways, this, look, we have New York. This is like end of day New York, right? 11 a.m. Eastern, which I think would be, what is that? 16 GMT, right? Anyways, you guys get like kind of the idea that I'm trying to like explain here, why I like having that sessions thing, right? So I'll keep it off because I know you guys don't want it on, but basically I would turn that on just so I can see if I ever want to refer back to like this day, I know at a glance where we were in what session, right? For these, I'm just gonna do, okay, we'll do +5R. And what you can also do if you want to get like really deep into it, and what I kind of did for my other markups, if you guys look in like team markups, I actually will like type out the whole reasoning as to why I got into this, or like why I would get into it and why the setup is valid. So you can like look at that in the examples, right? But we won't do that for this, again, just for the sake of like the fact that we're on the call and we're already like, I think an hour and a half in. We have about a half hour left. I didn't think it would take this long to actually go through. I thought we would be able to do a week, right? But that's okay. And we only did the bank holiday so far. We'll try to do Tuesday in the next half hour. I'll start picking up the pace, right? But yeah, what I'll do is I'll just mark out, again, I'll type out whatever the reason I got in, again, so I can refer to it. You could also just type it into Notion if you prefer doing that for the entry. I'll do that, and then I'll put in, okay, like, okay, we would have made 5R on this. If you had taken a BE on something, I would have said, you know, like either BE, right? Or if we take an L, I'll do -1R, right? In this case, this one's +7.2R, right? So if we add that up, 10 plus 7.2, 17.2R, right, is what we made for the entire day, right? If we're looking at just London, because remember, I separate mine between London and New York session, and you can do it that way too. What I would do is actually take a picture, kind of just like, I want to almost include like Asia range in here too. We won't be able to because it's really far back, but here's London, right? I know London opens here. This is kind of at lull. I would still consider this, I would almost consider this New York too, but whatever, we'll take a picture of it like that, right? We can consider it London. We'll pop it in here as, technically we should have put entry 2 in here, right? But there's our overview, right? And there was no entry 3 for London, so we'll do it like that, right? So London, we made 10R, right? You can see those two. So I typed it in, and then we made 7.2R, which is 3.6% at 0.5% risk, and roughly 3.2 grand Canadian after profit split and like conversion, right? If you guys are gonna edit this, just so you have reference for it, this is where you'd put your conversion rate to put it to whatever like currency you want, right? There's no way to get like a live currency rate, so I just put whatever it was right now. Dollar's kind of weak against the Canadian one, surprisingly. So New York, so same thing, right? Again, it's very simple. I'm just showing you guys. I know this is like pretty obvious, like how to do this, but for those of you that maybe are new to Notion or like, you know, you're like getting used to it, again, just take pictures, pop it in here. This would be my overview and honestly entry 1 too. Here's the thing, so I would do my overview like this, but if you want, you can actually zoom in so that you have a very clear picture of the setup, right? Oh, the other thing I wanted to show you guys, and we'll do this too really quickly before we continue on to Tuesday and pick up the pace. Oh, the other thing that I like to do that I feel like is really It's honestly helped me a lot, which is why like I'm gonna mention it. But within this, okay, I'll do the actual candlesticks, right? The other thing you can do is take the polyline tool and literally draw the setup out. So we can basically like pull a model out of it, right? So I'm just gonna draw over my candlesticks like this, right? And I'm gonna try and like keep whatever relevant like PA that I want to like show in the model, right? So it's not like I have to draw like every like stick like this, right? Instead, what I'm gonna do is I'm gonna consolidate certain like ranges of price action, because again, for the sake of simplicity for the model, so I can read it and glance at it and understand it, I'm gonna do this, right? And this is what I've been doing all week, right? Like this. It doesn't have to be perfect either, but you guys get the idea. So here's our initial reaction from supply. We blow through it, and then look, we come to retest this. So I'm actually gonna do like a little bit lower to make it obvious, to show that we actually tapped into this, and then that this flew, right? And there you go. So probably wondering, okay, this really looks like shitty, right? So all I'm gonna do is right click the candlesticks, because really candlesticks are just an indicator too, right? We're gonna hide it, and there's my model. Look at that, and I can even adjust it a little bit to make it like a little nicer, right? To make it a little bit more like clean and easy to read. But there you go. I just built a model out, literally a diagram in 2 seconds, with the drawings that we already marked out, with actual live price action as our reference, right? So you guys see how like good this is? The thing I did forget is obviously the change of character here. So you could maybe add something like this. I'll quickly add it. Where is it? Polyline tool. So I'll just go like this. Right, that would be our change of character. But look at that. So now I take a picture of this, and I literally have a model I can play with, right? And I can compare this to my like literal diagram that I have here as well, right? So if you don't have diagrams for your setup models, I suggest you do that, because it's super important. Look, I'll just paste it in here, and now I know, okay, this is what that setup was, right? Tap into supply, build liquidity, sweep the liquidity, and then go, right? So there you go. That's how our New York is done. And again, you'll see if you guys look, and I'm gonna leave this public so that you guys can like refer to it, and it'll maybe keep me accountable to keep finishing this. I'm kind of a little bit behind just because I've been like working on other stuff, right? Backtesting. But you can see that I think I did it for, yeah, for this one. Look, I made literally like models for each of them. Like these are a little messy, don't get me wrong, but look, if I pop this open, it's, again, I drew this over price action. Again, sorry, I know it's like really messy, but you guys get the idea, right? The one that I showed you is a better example, because it's a very simple setup, but I think I did the overview for this one. I suggest you zoom into it so you can like build a nicer looking diagram, right? But that's all that this was, right? I think this was Tuesday. So we're gonna go over that next. Let's quickly do Tuesday while we, because we got about like 20 minutes left, right? But yeah, I mean, what do you guys think so far? Like, are you guys getting like the process out of it? Does it make sense? Good? Bad? Good? Cool. I'm glad you like it, Dana. Good, good, good. Sean, of course, loves it. Sean, I'm sorry for using blue so much in my charts, man. Maybe I'll try to like switch it around a little bit for you, you know?
Hey, Rob, I have a quick question.
Yeah, go for it, Esimo. What's up, man?
So when you do have you have your entry model and you set your limit order, when will that limit order be invalid? Is there a specific zone that price taps into, and then that limit becomes invalid, or how far should price go when that limit order becomes invalid? Yeah, that's basically where I just lack my confidence in.
Yeah, that's a good question. For me, it's purely like, it's based on context. It's a very contextual thing, right? If we break out of like the current range that we're in, and look, I even got faked out on this one, right? I wouldn't have left like a limit order on this personally, and you could have, right? For me, because we broke like all these levels of supply and we're kind of like pushing out of it a lot, like I didn't know that price was going to come retrace this aggressively down to this, right? So like personally, like I wouldn't leave an order on for that, and I would absolutely take my limit off if like we blew through this area of supply, right? Because remember, we're coming from like a bearish market, at least in this case. This is a good example because at least you have like some context for it. But say we didn't get tapped in here, obviously you're gonna take the limit off if price like starts pushing up like that, right? It's not like I'm gonna leave it on for 2 days and expect that it gets tapped. right? Even though sometimes that does happen, right? It really boils down to your understanding of price action and knowing that, okay, this is a protected low. And again, like if it's within your plan and you feel comfortable doing it, of course you could leave the limit on for what? I don't know. How many hours is this? This is like 8 hours of price action, right? So, and I think it is anyways. Let's see. From the point that the POI is built, okay, it's 5.5 hours. Again, me personally, like I'm not leaving that on. You can ask Blackwatch, would you leave this limit on? I think he would. He does stuff like that. He's kind of crazy. But if it makes sense, right, and you like have that understanding, then of course you can do it. Oh, he might not actually be in here anymore. I think he had to go. Let's have a vote in chat. Who would leave limits on for this? Yes or no? Would you leave your limit on? No, right? Once it runs. Nope. So there you go. There's your answer. Your answer, Esteban. I agree. It's too far, right? And look, we got a re-entry anyways after we tap into our POI. So here's the thing though. I want to mention this to Esteban. The fact that we tapped into this anyways, right? And we were planning on trading off of it. Or no, I think we were planning on trading off of this, but we could see in hindsight, right? As price developed and we tapped back into this, it wasn't actually mitigated. Like that tells me like I'm going to be pretty aggressive to try and get into this. And this wasn't even that aggressive of an entry, right? Because again, like it showed intent. Like here's that V-shaped recovery that like Sam and Albert always talk about. I don't really look for that. It's kind of like built in to what I look for entries. I always look for that, right? Like strong intent from the other side showing like, okay, we are going to start taking off here. Like start looking for an entry, right? But it's good that they mention it because I think for people who are new, even, right? Like if I start seeing my setup and it's like, say we're coming down like this and we're just kind of like this, I'm not going to try and trade off of that. There's no V-shaped recovery. Like for me, of course, I'm going to look for like something like this. I want my change of character, right? Pretending that price is going like this, right? Take the low, take the high, right? This is that V-shaped recovery that they're talking about. It's not a separate setup or anything. I think it confused some people when Albert like released his trade plan. It's not its own setup. It's almost like a required confluence, right? So there you go. There's your V-shaped recovery. Pop up. We're good, right? So I think we have like what 20 minutes left here. I'm surprised time like really flew on this one. I wish I could have showed you guys like more, but maybe we can continue on if you guys want next week. Not necessarily this price action, but we can do this same exercise again next week if you guys want. Or yeah, I mean I could do a weekly, Kurt, if you want. I think it is like, do you guys feel like you learned more from this than from Software FX? Like let's just get a vote in here because I want to try and cater it to you guys as much as I can and like help you guys learn, right? A lot? Okay, good. So maybe we'll do this weekly. Here's the thing though, I still want to do Software FX once in a while because it is fun, right? I think some of you guys really enjoy that as well. Software FX is ugly, but it's good for practicing trade management, right? So that's why like it is a tool that we can use and like it's a good tool, right? So maybe we'll do 50-50. Now that I've shown you guys how to like actually set everything up in like Notion and like how to mark stuff up, build your structure. I know we went over that a couple times in previous webinars. And I've shown you guys how to make diagrams and like investigate, using the little lightning bolt. Maybe we'll just use this from now on, the yellow lightning bolt, to like investigate for entries, right? Next week should be fast. We can do like we can do whatever day you guys want. You can just tell me, we'll vote on it. Obviously I can only do like 2 weeks back in price action. Ideally only 1 week if we're gonna like assess things on the 15 second, right? But we'll do that, and then yeah, we'll do for the second half in the future, we'll do Software FX. So we'll kind of split it, and I think that's good. We'll get variety, and again, I know there are some people in here that really enjoy Software FX, and like my favorite part of it is just like the trade management, because you're not going to get that from TradingView. That's the thing, right? It's a fact, you won't, right? You're like, the problem with TradingView and trying to like do trade management in it is, number one, it's like super cumbersome. You could do it and say, okay, I'm taking partials here, but then like you have no number to really tie to it, right? We know when you take partials, you're obviously cutting off the potential profit that the rest of the trade runs, number one. And then obviously you're not taking like full profit at whatever like level you really want to take it at, right? So you almost, in a sense, you stunt your certain like trades. And again, you don't get like almost like you don't get like the perception of that when you're doing it in TradingView. We're assuming that, okay, we would have held these all for this much R, right? I mean, that's not really that realistic, right? This is a bad example because obviously price is very like corrective in this, but say we like hit a 20R trade like this, right? And price runs, of course you're gonna take like partials at certain levels, right? If it's part of your plan anyways, right? If it's not and you wanna, you know, try and hard TP it or whatever, right? And potentially like risk losing it, not taking like money, not paying yourself, right? I mean, you can do that, right? But again, software FX, because of its whole like trade management system being like so robust, I know the tools suck and it's ugly, but you get something that TradingView like really doesn't provide, right? Oh look, this does actually run. So you could have held this. So this is what I'm talking about, right? In theory, we could have taken partials right here, right? On this, and not just had it as 7.2R. And then I could have taken, maybe I took 50% here, and then 50% at 15R, right? And so really you're pulling, what would it be? If I took, what's half of 7.2? Roughly like 3.5, right? Or no, sorry. Yeah, 3.5R, right? And then if I were to take the other half off, like imagine having to do all of this in your head, right? If I take the other half off at 15R, right? I don't even think this is an accurate calculation, but you'd basically be pulling like another 8R out of it, right? Roughly, right? So 3.6 plus 8, it's roughly like 11 something, right? It's not an accurate depiction, right? You're not gonna like go into Notion and type this all in. Like it's too much work. At least with Software FX, it does it all for you, calculates it, and it's actually like realistic, right? And you have spreads involved and everything, so it is a little more hardcore, but yeah. Okay, for Tokare, I hope I'm pronouncing your name right. You're saying you're new to the community. Can you briefly explain Software FX? Yeah, it's this tool. Oh, I don't even have one. I don't have one loaded up, but basically all it is it's like MT4, but like kind of like better quality. Not better quality, but like it's there's like a sim inside of MT4, and you can basically backtest like real price action with real trade management tools and stuff, and spread and everything. Okay, so let's see. Blackwatch is saying short me. This is Asia though, Blackwatch. I don't know. I don't trade this, man. But we can look for the entry model. Why not? Again, we only have like what 10 minutes left here. What do you guys think? Should we like look for an entry in Asia? Because Blackwatch said. Put a little lightning bolt. We can. Let's do it. All right. So we tap in, right? What's the other thing I'm always looking for? Sweeps of liquidity, right? So look, this is this is really inducement, but like the way that you can classify this is like pre to the mitigation liquidity that's built, right? If I go back to the 15-minute, this is all just uses really inducement, right? So we got liquidity here. All of this is internal range liquidity to fulfill this. And then look, we have pre to the POI liquidity. This is the same thing that I like answered in questions the other day. Somebody was asking, how do I mark out, or like how do I like decide if like a POI is good quality or not? Number one is structure, right? We're still with our 15-minute swing structure, so of course this can hold, right? What's another confluence I look for? The fact that this builds liquidity. One I actually forgot to mention is whether or not it like mitigates something to the left or is building a supplier demand chain. So this one does that too, right? Look, we mitigate this. You guys see that? It's 15-minute zone. We sweep internal range liquidity, right? In the formation of our POI. What else does the POI do? It breaks multiple levels of structure, right? I wouldn't say this is the origin, but like this breaks this low, this wick low, this major wick low, right? It's kind of the start of it, right? I'd say really this is the start of it, but I remember this is like more in premium of our overall like range here, right? This is still in premium. Like here, I'll draw the EQ tool so you guys can see what I'm actually talking about. This is our current trading range here, 15-minute swing structure. Look, we're above EQ. So yeah, this is a good zone, right? What else do I look for? Inducement, and then again, like this is more of an optional thing. You don't need this, but if it builds liquidity on the lower time frame just before tapping into it, like that's nice, right? Again, remember, people shorting this thinking this is like, I mean, if you're stupid enough to try and short this, not in a POI, and just shorted off with like support resistance, like your stop losses would be up here, you get swept out, right? Fair play to those of you that obviously came from retail. I did too, and those of, I mean, I don't think there's anybody in here that trades retail anymore. If you're in Phantom, you're obviously trading like these concepts, right? But like you can be profitable doing that too. I don't want to like completely knock it, right? But for us, when I see, obviously when we see equal highs like this and liquidity gets swept, like that's a nice signal to us, right? Potentially it's a trap, and especially so if we're tapping into a 15-minute POI, a higher time frame POI like this, right? So let's mark out our change of character and let's see. I kind of gave you guys an idea of what like the model is that I draw or that I use without like giving you the actual model, because I don't want to share that. But can you guys mark it out based on what I showed you? This is kind of our last trade setup, so I'll give you guys the opportunity. Grab your pen tool out. Show me where the changes of character are. Show me where the liquidity is built. All of that. Okay. So I'll start marking it out with you guys. So yeah, I would say this is our change of character. Again, this is a little aggressive, but it's at least extended out enough that like it's good, right? Yeah. Shane says we could use this. Okay, Shane, I'll do this for you. Again, I don't know if this retests, to be honest. I don't remember. Again, I wouldn't have traded this because it's Asia, but like Blackwatch said to take it, so that means it probably does run. He probably remembers the price action, right? Okay, so, and then you guys were saying, like, what were you guys saying? This is a doo-doo PY, or this one here is a doo-doo PY? Which one's not good? Remember, we're looking for shorts, right? So we're looking for demand failures, right? Failure, right? There's our demand. You could even say like this is not really a change of character, but like it's again just a failure, right? Look, we actually sweep this inside bar, right? See how we sweep it? So yeah, there's a couple zones we can look at for this one. Honestly, I'm gonna mark out two of them: the extreme, and then I'm gonna mark out this one that starts to chain a little bit. This one's like really weird because it's not clear, and I feel like on the 15-second there was probably something here, but look, you see how we're starting to chain supply here? Potentially. The chain hasn't really started yet. We only got one mitigation. And also momentum could take over here, so like there might not even be an entry, right? But for me, I'd probably be most keen because I'm seeing momentum, and again, it is Asia, so like obviously we could come into the extreme, right? I'd probably be most keen to take this, and I would also probably leave a limit on this, right? You could even wait for a double confirmation entry, honestly. Okay, Sean, so look, we broke below yours. Let's see if price even retests it. Okay, we're building more liquidity. Remember, why are we building liquidity, you guys? Same thing. Yeah, exactly. We're reacting to a demand level that we expect is later going to fail, right? So remember, we're just building more liquidity. Not only are we building liquidity on the flip side of it, because like we have this, right? But we're also building liquidity to the downside that's going to later fuel our theoretical move, right? Because in theory, this liquidity here, anybody who's longing or is in long positions, buying, is going to have stop losses under here, right? So then the minute that we tap into those, or even people who are like leaving like sell stops, right? Because they're breakout traders, right? And they want to try to catch the short, even though it's like super late to catch it. They're going to fuel the move. The minute that price pops into that, there's going to be a bunch of like selling price action, right? Or selling momentum, right? So let's see. Okay, we sweep this liquidity in here. I'm not sure we got a re-entry on this. I can't remember. No. We built more liquidity. It's possible that like these are gonna get left unmitigated, right? Look, we built liquidity here as a result of demand, which is now starting to chain too, so we gotta be a little bit careful, right? And these haven't failed yet either, right? So there's our reaction liquidity. So yeah, what would I look at? There's a couple places we can look at for this one. Either this, right? Or the one below it, which is this inside bar. But it looks like so far we're actually reacting to these wicks, but I don't really enter off with stuff like that. Okay, so it looks like we do tap into this one. So again, I'm gonna leave a limit here and at the other one. Let's see if it does come tap into it. Price is corrective enough for it. Oh, these are tiny stops too, look at that. Again, it's because we're probably in Asia, right? Not very volatile. You could even do 2 pips like this and cover the high. But we'll do this. So I'll leave one here. I'm going to shrink it down a little bit. And I'm going to pull this all the way to the right. Again, in anticipation that it might get tapped, right? Same with this one. Here's our extreme. I'll give it 1.3. Make it smaller. Pull it out, right? Okay, so we got 2 limit orders resting there. Do you guys want to market execute this? Let's try to like make this a little bit more realistic. Say like you have the option, right? Do you guys want to enter this extreme? This got used as inducement, right? I know it's going to be kind of hard to see, but we got liquidity here, and obviously this was liquidity. What do you guys want to do? You like the sweep of the flip? No, don't worry, Brian. It's good. We haven't even hit the 2-hour mark yet, so we're good. Let's see. Okay, this one holds. Look at that. Right, so you guys see how like all of this demand, and obviously here's the other thing that I forgot to mention, right? Look, these levels of demand failed here, right? So these flips, if you were to try to like short off of this, number one, you're getting swept out like crazy. Number two, I mean, actually, I think that's the only point. You're getting swept out. Like, you're gonna get used as liquidity to fulfill basically the extreme, right? Even this one, right? Because technically you can say like, here's I guess like the hard part about it is like you could have said, okay, this is liquidity, and this is why I would have left limit orders on this too, right? And it's not to say price can't come back to that later. Let's actually like run through it and see what happens. And no, it just dumps, right? But do you guys see how, from a structural perspective, why like it actually reacted to this? So we were really just playing the pullback here, right? We were obviously playing off of this demand, right? Price ranged a bunch, and this is all in Asia, right? Oh look, we actually retested a second time, half past London Open. Look at that. That's actually really interesting.
Hey, Robert.
Hey.
I have a quick question.
Sure.
You say that you would have left the limit orders up above, right?
Yeah.
Say for whatever reason you see that the first entry fails,
yeah,
and then the second fails, and you see that it's approaching the extreme, you would still leave that limit, or you would like see that there's more bullish intention coming into the market that's already taken up 2 of those entries?
No, so for me, okay, maybe I wouldn't leave. I mean, you could always play the retest too, right? Like the reaction to this decisional, for example, and same with this, right? I could look for the model again here, whether it's on the 1 minute or 15 second. But remember, right? Like any of these could get used as inducement, so it doesn't mean that like we shouldn't expose ourselves necessarily to like any of these, right? If our analysis is, you know, like from a probabilistic perspective, like somewhat correct or correct enough, we should let our edge play out and take them, right? Because the thing is, you pull these off and you take these L's, like great. Now you can't cover for those losses because you're too afraid to take the next one, right? So it really boils down to you and like, I guess you're like how comfortable you are with like putting on that risk. If anything, you can just leave one limit on the extreme, forget this one, right? I think honestly in a live market, this is what I would do. I'd probably leave it on just one of them and then, you know, maybe like try to take this, right? But then look, for this, honestly, like no, I wouldn't have left it on once this low broke, because then we're out of this trading range now. That's just me personally, right? So that makes sense. Like I think everybody agrees, right? Like the minute we break this low, why would you leave this on? It doesn't really make sense to. So I'm saying within this range I would have, right? If price had popped up, then yeah, that makes sense. But I'm gonna leave those drawings on. I won't leave the orders on, but like again, it's just to show you, right? Like price doesn't have to come into these. And this is a lot of the time what I feel like is happening when people take like these decisional supply or demand flip zones without really like paying attention to liquidity, right? Sometimes you take it, but a lot of the time, like if you're too aggressive, and this is the reason again, like we always say, everybody on the team, the coaches are saying like, don't just try to take a flip zone anywhere, especially not deep in discount if we're like trying to short, right? Or deep in, or like or really high in premium if we're trying to take a long, right? There's a reason, like there's a time and place for taking flip zones. For me personally, again, because I've taken a lot of losses, trying to just take straight flip zones, and I know a lot of you in the community do it too, because I see it in EU chat all the time, or you're just taking random stuff. I prefer to like wait for liquidity here. And again, I have to like give credit to Blackwatch, because like this is how we were trading in the past too, right? Before we ever like introduced flip zones and stuff, we were always looking at that lower time frame entry model where we're waiting for liquidity pre and post to the reaction, right? And we're waiting for inducement, and we're looking for POIs that have liquidity, right? So liquidity plays a huge role in this, right? Just like structure does too. Like I would say, like, I know like somebody asked in questions the other day, which is more important, right? Or like if you had to order everything from like most important to least important, they were asking, I think it was Kyle that asked it, structure, liquidity, or POIs. I would honestly say like structure and POI and liquidity are pretty much equally important. You should be looking at both, right? Because using one without the other, like you're really asking to get like swept, right? Because either you're going to be trading against structure, which doesn't make sense, or you're going to be trading against liquidity and you're going to get used as liquidity, right? Even if you are with structure, right? So having an understanding of both and developing that skill is like super imperative, right? And then obviously having like a lower time frame entry model to play off of. But this is why I've emphasized so much in this like session, why like you should be using lower time frame liquidity, because it's going to keep you out of like really crappy S to D flip zones, right? Again, it's not a knock on S to D flip zones. Like we use them. I'm using them here, right? But I'm looking for liquidity to pop out first, and I'm really just taking the origin a lot of the time, right? Like here's a good example of one, right? I'm using as liquidity, I'm using the origin, right? So you could have shorted that. Technically this one's valid, right? Okay, yeah, real quick before we wrap this up, I wanted to show you guys this here too. So I know, again, Brian, I know you're in here. This guy would have left a limit probably on this because he does stuff like that, right? So really you would get like a re-entry if you wanted to hold this. For me though, okay, despite the fact that this is like Asia, in terms of targets, let's just look at it. I know this is in hindsight. We already see what happens, right? But I want to try and be like a little bit realistic with it. Oh, hold on. Let me extend it out a bit because it's too small. I want to be realistic about this, right? Pretend this happened at like Frankfurt or London Open, right? Okay, we know we're with trend, so like this is probably going to like fail. But if I'm an intraday trader, let's say this even happens at New York, right? The way that I'd probably manage this is just look to take 10R on it, or maybe try to like partial here, and like take full volume off at like 20R here, right? And obviously that happens, right? Look, we even retested a bunch of times. I mean, that's Tuesday for you, right? Tuesday had a really, like actually a lot of really nice price action. Maybe for like, oh, I don't know if I'll be able to like back test it again, but I almost wanted to show you guys Tuesday because it was just so good. Maybe if anything, yeah, we'll see. Maybe we can do it in 2 weeks from now, right? And actually try to like break down all of this price action. Or what we can do is I can have you guys do it, right? I'll give you guys some homework on this one. And you guys can post it. I don't know. Let me think of what channel we can post this in. Maybe we'll post it in like, let me see here. We'll do markups, okay? Or case studies. You guys know the case studies channel, right? I want you guys to mark up Tuesday with everything that I taught you, and let's see like if you find your model or not. If you take losses, throw it in, right? Do your like higher time frame markup. Use the notion that I gave you, or whatever else, whatever format you want to use, and post it in case studies. And like, let's study. Let's everybody study Tuesday's price action. Tuesday, September the 7th, from like Frankfurt Open all the way to New York, because there's a ton of like really nice continuation entry trades in here, right? Or continuations, shorts. So. Does that sound good? Are you guys down? It's almost like pip quiz, but like, yeah, case study. We'll do case study. And Sean, stop sliding into people's DMs. Is it Sean that's doing it? Oh no, it's Ammo. Kurt, no problem. I'm glad you guys got something out of it, and everybody have a really good weekend. I think this was probably one of the best sessions we did, honestly. You guys learned a lot, so it's good. Yeah, Sean always slides into my DMs. I don't know what's wrong with this guy. No, I'm just kidding, Sean. Alright guys, take it easy. Thanks again for coming and everything. And go do your markups. Post that stuff in case studies. I want to see what you guys like pull out of it. Okay.
Thank you so much for this session.
No worries, Chaba. Okay, somebody's asking for my chart colors. Are you sure you want them? They're all blue. They're different colors of blue. Look. Okay, so here you go. I'm gonna post it in the chat. Let me stop recording this too, because this is kind of unnecessary.